prices are going to have to make a move out of this compression range fairly soon in one direction or the other. This morning could be potentially a catalyst for that. But here's what you need to know before the bell this morning. Markets did sell off just a little bit yesterday following the Apple announcement. We actually rallied into the announcement yesterday. After the announcement, kind of a bit disappointing. Markets sold off, but again, still well defined here in terms of, kind of this pattern that we've been in. We have this wedge pattern being built here between these declining tops and rising bottoms. That price compression is becoming a bit more complete here. So again, prices are going to have to make a move out of this compression range fairly soon in one direction or the other. This morning could be potentially a catalyst for that. Expectations are, of course, for CPI to print at the core right around 0.2%, but at the headline could be as high as 0.6%. But again, if we see a number that's 0.6, 0.7, that could lead to a fairly big decline in the S&P, and that's estimated could be a 1.5 to 2% decline in the S&P if the inflation comes in a lot hotter than expected this morning. Of course, a much weaker print at the headline would also be a boost for stocks. Could be 1 to 2% on the upside if headline inflation comes in weaker than expected. So again, we're back to kind of these inflation games, but importantly, keep a watch on this kind of this wedge that we're building here, because this is going to eventually compress and the market is going to break out in one direction or the other. We're still currently on a buy signal at a fairly low level. The markets are not extremely overbought, so there is fuel here for an upside move in stocks. But again, we could have a bit more pressure here in the short term because of this inflation report. We've got the Fed meeting next week. But once we get past that, we're going to start moving into the seasonally strong period of the year, October, November, December, and portfolio manager positioning going into year end. So again, there is still an upward bias to the markets. You certainly want to kind of keep playing that side right now until the market tells you differently, but could have some volatility this morning around this CPI report and what it comes out and says. Now remember, whatever the headline inflation number is, that's fine. What the Fed looks at is the core, and then tomorrow we have the producer price index, which is the other inflation gauge that the Fed looks at, also at the core. So again, it's the core that matters, much less than the headline, which is volatile due to energy prices, food prices, etc. But we'll see what the market says and how it reacts today, and of course we'll update you tomorrow on where we are. But again, buckle up. This morning could be a little bit volatile in the market because of this inflation report. That's what you need to know before the bell this morning.